Stop chasing. Look, it's Marcel, aka Honey Bunny Sunny, and I'm on a mission to make you some money. Listen, today we got a very helpful video. But before we jump into it, I need you to hit that subscribe button, hit the like, share with somebody who's on a mission to make some money, because I'm on a mission to make y'all some money. Okay. All right. Listen, today I'm going over a way that you can solve the problem of figuring out how much money you're going to make in an options play. A lot of people don't know how to do this calculation. A lot of times the calculation is too daunting. Like a lot of people, they're like, all right, well, if I get in it, how do I determine my risk to reward? What am I going to make? You know what I mean? Like what am I going to make? How am I saying I'm going to risk this amount of money if I don't know what I'm going to make? I got you. All right. We're going to get into an example. I'm going to give you guys the resource and everything and show you exactly how you're going to be able to calculate this for yourself. Okay. So in just a second, you will see. All right. So this is the resource right here, right? It's called optionsprofitcalculator.com. All right. Optionsprofitcalculator.com. All right. Now, we just are simply going to go to long call, right? So this is, I'm defaulting to the long call section. As you can see, it says / long call, but you can also do, long put, or short put. You could also do, various different types of options plays. But for the example, I'm just using a long call, a regular old long call. And I'm just going to go ahead and put a random company here. So let's say NVIDIA. Let's say NVIDIA, right? NVIDIA, we're going to get the current price. So you type in the symbol, and then it's going to give you the current price. You don't have to leave this page. You don't got to do no extra stuff, right? So you type in the symbol, hit get price. It gives you the current price. Okay. So what do we want to do? We want to buy, of course. Now you're going to select your option. Again, you don't have to leave the page. It's going to be right here for you. So let's just say we're going for, let's say October 17th, right? October 17th. And then we're going to go for calls that are at the money, right? So we're going to go right here with the 755 calls, right? This total cost is $755 because, again, you got to multiply the 755 by the 100 shares that your contracts are in control of per contract. Of course, if I were to get more contracts, say I wanted 10 contracts, this would now turn to $7,555, right? And we, just continue to multiply by 10, each time we go up. So let's say you're putting up, just one contract. So $755. All right. So we got $7.55, which translates to $755 for the cost. And then what we want to do is we want to come up with a range, right? So again, the expiration date is October 17th, right? October 17th is the expiration date. So, okay, if the price is sitting at 178, let's see what I'll make if the price goes anywhere between 180 and 185 during that time period. Pretty small gain, but let's just see for the sake of things. Okay, we agree to the terms, and then we calculate, right? This is where it gets good. Watch when y'all see this. All right. So we're just going to scroll down here to the table, and I want to show y'all how to read this table, right? So up here, we have every date from the day that I'm choosing to get in. So September 23rd, all the way through the 30th. It's only 30 days in September, and then all the way through October up into the 17th, which is the expiration date. So that's the very top row. To the far left, the column is showing the range down here from 180 all the way up to 185. Now, inside of here in each row is showing the percentage gain that you will have if your stock gets to the associated price target within a specific period of time. So if we were able to get to 184.40, let's say by next week, September 28th, that would be a 41.3% gain or $312. You see how that works? All right, let's say we get something super fast, right? Let's say 25th, it go all the way to 185. 53.1% gain, $401, right? All right. You may be thinking, okay, I think it can go to 200. Let's see what 200 looks like. Say 200 to 205. Calculate. And then we'll come right back down. Look at those gains. So if by the 17th we were able to get to 205, you would have a 264% gain. If we were able to get to 202 by the 25th, you would have a 243% gain. Let's get a little conservative. Let's go all the way out to 1017 and just $200. You would have a 198% gain on your money, right? This is game changing, okay? I'm gonna go ahead and shut this down. This is game changing, right? It is extremely important to understand what your risk to reward is. Sometimes we can't calculate the risk to reward in dollars or percentage. We can only calculate it in distance. Like, oh yeah, it's going to go this far on the chart. You're looking at the charts. You don't have time while you're trying to trade to calculate that. This is going to help you plan your trades for the week, right? When you learn how to move through it quickly, it can help you before you even enter a trade, right? You could just have this up in another tab and you can go do the calculation quickly and say, okay, if it gets here, then I should be making about this much. All right, this is another thing that's going to help me decide to get into this play or not get into it. All right, I really hope this helps you guys. Listen, I appreciate you guys tuning in. We are on our way. We got that momentum building up. We almost to that first milestone of 1,000. If this was helpful, please leave a comment. If it was helpful and you'd like to hear more, please subscribe. If not, I'll see you in the next one, okay? Remember, invest smart, live free. Peace.